Good evening, friends. I'm Neelam from Crane Advisors. Welcome to the virtual IPO roadshow of Vishnusurya Projects and Infra Limited. Vishnusurya Projects and Infra Limited, part of esteemed Agni Group in Chennai, is a prominent Indian construction and infrastructure firm. The company specializes in executing EPC projects across essential sectors such as transportation, railways, resources, and institutional development, and it maintained a significant presence in mining. Additionally, the company is known for its successful delivery of comprehensive civil and commercial turnkey projects. Joining us today is Mr. Sanal Kumar, full-time director and CEO of the company, Mr. Renav Manseta, associate director, Khandwala Securities Limited. Now, Mr. Sanal will give brief introduction about the company. Over to you, sir.
Hello, good evening. First of all, thank you for all of you for the time today and expressing interest in our company. So, I'd like to give a brief background on the company per se. We started in the year 1996, probably as a turnkey contractor company, and since then we have been very active on the turnkey contracts or EPC, as we call it now. Somewhere in 2015, probably we're seeing that there's a huge scope for aggregate sector because 80% of the construction happens on the construction aggregates, or rather 60% happens in construction aggregates. Having felt that we have an opportunity in that aspect, we got into the mining sector, and with that, we started getting into the aggregates and mining. In 2015, we had our first project happening in south of Tamil Nadu, very close to the Madurai. We started our first project, and 2020 we had our second unit in Vandavasi, very close to Chennai. So that was our forays into mining sector. In EPC, we have been very active in civil construction side. We have been very active on metro rails. We have been active on road projects. So that has been, we have delivered probably around 20, close to around 20 projects as on date, and mining is happening on the other side. On a very small segment, we also into drone activities where we do the drone survey using drones for the NHI projects, and some bit of trading here and there. Though it's not a very active segment, maybe around 2 to 2.5% of the turnover comes from the drone sector. So that has been the market. So we are totally into three divisions. One is the EPC, second is the mining and construction aggregates, and third is the drones. Yeah. So can we have the presentation, please? So this forms the management, the directorial board, which comprises of Mrs. Bhavani Japrash, who has been the promoter of the company, Mr. Tangam, who is a whole-time director, Mr. Neelakandan is a non-executive director, and the independent directors are Mr. Ritesh, Ms. Maya Swaminathan, and Mr. Ramana Kumar. Then this forms part of the works which is under the current order book, which includes the one of our NHI project. Then we had there's something under Jal Jeevan mission, what we are executing in Tiruvallur municipality and Madurai, and something which is the fisheries department, where we are building a fish landing centers and fish ponds things. And there's again one more EPC under Jal Jeevan mission in tie-up with JWL. So this is the current works which are going on, which is about 240 crores worth, and we expect the balance to be for this year. I think around 160 crores is to be under execution is going on as on date. Oh, yeah, the clientels includes it all as name. Probably these are the most famous clientels which we are holding from Adani. We have an ACC is our client, which is part of the Adani, then JWL, SPL, L&T. So these are, apart from this, we have a host of other small contractors, the probably who may not be have been listed or who may not be in a private limited into the organized sector. So we have other clients from that other sectors also. Then we have about this is our turnovers and revenue from 21-22, which we were about 63 crores, and there has been a growth to 76 crores by 21% jump, and then there has been 132 crores in 2023. This jump has been primarily due to the new construction aggregates location being opened at Vandavasi, which is probably getting to our Chennai markets. So if you see the mainly from 42 crores, the aggregates has gone from 42 to 74. That has been a major jump. And this year we are 260 crores is what is proposed, and the numbers are there in that. Yeah, this probably shows our interest in the sector. If you look at, just to give a brief again on the EPC side, as you look at the construction industry, at current rate is growing at 14 percentage, and probably all of us are taking a pie from this sector, from the growth sector, what we are going in currently. So, can we take it up for next?
Now I would like to request Mr. Renaud to give details of the IPO.
Thank you, Sonalji. Thank you, Neelam. Uh, we thank everybody for joining us for this presentation by the company. Vishnusurya Infra and Projects Limited is coming up with an initial public offering of 73,50,000 equity shares of rupees 10 each for cash at a price of rupees 68 per equity share, including premium of 58 rupees per equity share, aggregating to 49.98 crores. It's a fixed price issue opening on 29th of September and issue closes on 4th of October.
Now we'll start with the question and answer sessions. Question has come from Ms. Bharti Agrawal. Can you elaborate on the types of projects you have executed and which segments have been the most profitable?
Yeah, see, we executed projects under probably almost all the sectors, right from the residential, commercial, roads and bridges, then fisheries, prawn. So I think invariably all the projects have somewhere around 20 percentage or odds of margins at the on a high level. Probably among the divisions, if you ask me, probably my mining construction aggregate section will be more profitable than other things, and on a division wise comparison. But project wise, if you look at, I think it's invariably everything runs around 20 to 25 percentage of margins.
Another question is from Ananya Swaminathan. What are your growth plans for the next few years? And are you considering expansion into new geographic regions or sectors?
See, growth plans, see, as of now, if you look at Tamil Nadu itself, probably is spending very high on infrastructure. So we are always open for growth, but provided, I think once we find this Tamil Nadu being a saturated point, but otherwise Karnataka or Andhra or Telangana are equally good markets. But I think we have a large, probably better pie to take it from Tamil Nadu itself. If you get any better opportunities, definitely why not? We can always explore any part of this country. Growth plan wise, I think we already have given the data for to the NSC's prospectus. We are having it. I think I'll not give it probably a little forward-looking statement at this stage.
Another question is from Mr. Bumper Roberts. What is the vertical wise revenue breakup for all the three verticals?
Yeah, I think that we are given the presentation. Madam, can I just open the presentation? I think that is there, the data is there in that. Yeah, one sec. Yeah, here you are the for probably 22, 23, aggregates came to 56 percentage, EPC was around 42 percentage, and drones was about 0.77 percentage. Prior to that, if you're looking at 2021, sale aggregates were at 53 percentage and DP. So typically, I would say between 50 to 50%, 55% is EPC, is into aggregates, and 40 to 45% is into EPC works.
Another question is from Ms. Ananya Swaminathan. How do you mitigate this risk, especially in terms of project delays and cost overruns?
See, project. If you look at see, cost overrun typically happens only when there are project delays. Otherwise, I don't perceive much of any project cost overruns. If you look at the project delays, typically all the projects what we take is about anywhere between 12 to 24 months. We don't take much longer duration projects. So all the project what we are handling, be it residential, all those things will be ideally being completed within this 24 months. So dealing with that, primarily what happens is that we have a very, very strict project management team in place. So what has to be executed during the end of 24, once we get a 24 months, we plan to execute within 18 months to 20 months. So my project management team clearly specifies on day one to day, probably if it is 18 months has been totally bifurcated, what you call the critical path method. All the critical works have been identified and they has been set month wise. And each month what has been executed, we have a thorough plan. So the moment we find that probably at 1 month we lag, 1 month we probably our lag is there, some issues are there, probably maybe natural calamities or maybe due to labor shortage, whatever it may be. The next month or within next 2 months, we try to cover it up so that 18th or 20th month, when we reach there, we don't have any of much of a delays. From our experience of last probably 8 9 years since we've been handling on this, I think not maybe 1 or 2 projects will probably we are overrun by 1 or 2 months. Otherwise, we don't have much of an overruns in terms of projects.
Ms. Bimal Gandhi is asking, how does your integrated model and in-house capabilities give you a competitive advantage in the industry?
So this, I think probably this is one thing. Like when we started mining, probably we did a back-end integration of the industry. So if you ask me, this gives a much better competitive advantage in the market. Like just to put an example on today, when we are building a road in Chennai, there has been instances where there has been raw material shortages. So when since we have this plant in which is very close to Chennai, I was able to bring the materials from there and do the project, and probably that has given us an advantage to complete the project. So that integration of the backward integration of those particular industries has really helped us, probably, which is one way it is helping us to gain or to avoid any project overruns in that extent. To that extent.
Mr. Gaurav Mehta is asking, what was capex for the last 3 years?
Yeah, last 3 years. One sec. I think we can you just present it and the balance sheet. Yeah. Oh, yeah. Yeah, the capex, I think that will be slightly smaller here. But for 23, we had an 22, we would have a larger capex between 22 to 20, between 21 and 22, we had a larger capex, probably around 20 crores. This is primarily because that is the year when we established our second mining project, which is very close to Chennai. That the total cost is about 25 crores, if I'm right. So that additional capex would have been added here. See, otherwise than that, for my EPC sector, we don't have much of an capex because either we hire it or or others are primarily all about the strippers and thing, which is always movable from one project to the next project. Primarily, probably the mobile tippers are there. Then you have our RMC plants. All those are movable items which we can always relocate. So there we don't have a much of a capex. One project over, we take it to the next project. The major intake wouldn't be a capex is only between 21 to 22.
Ms. Ananya Swaminathan is asking, are there any plans for strategic partnerships or acquisitions to fuel growth?
Definitely, there are plans for this. As a first stage, I think probably last year we had a first joint venture with along with JWL where we are quoted for a Jal Jeevan Mission project. See, but we had our financial eligibility for the particular tender, but we didn't have the technical eligibility. So we had collaborated with JWL and we jointly quoted and we had won the tender, which we are currently executing it. So definitely the strategic partnerships are probably order of the day for probably taking us to the next level, which is already there and is in the pipeline.
Mr. Sandesh Shetty is asking, how does the company plan to sustain or improve profitability in the future?
Yeah, see, typically, if you ask me on our top line is ideally divided equally between the EPC and the mining sector. If you look at my mining sector, the products of the mining sector is having a perennial demand. Like for any concession you do in the market, be it from house, be it roads, or anything you take it, any concession requires 50% materials from me, from the construction aggregates, or even for that's a manufactured sand also comes from that. So we given that becomes 100%. You'll never have to stock those items. The moment you produce or the week you produce, everything will be sold off. So that profitability is always on the good side. And as far the EPC goes, if you look at, we have been doing newer projects, newer. I mean, from primarily being a residential player and doing metro rail project, we are diversified into various other sectors, and we find there are avenues like the fisheries department which are more profitable than all others. Plus or minus 5% probably we are in. So we are always in the lookout for newer projects, probably smaller, mid-size segments, and we are trying to arrive at a product mix where the profitability is at its peak.
Mr. Bhagwan Roberts is asking, what is the sustainable margins that company can maintain?
Companies, so rather than saying what are the sustainable margins, I think so we should right now stick to the numbers what we have, because what margins we will be able to maintain in future would be
Yeah,
some sort of a futuristic statement. So we would want to refrain that and at this point in
yeah.
time.
Probably the 23 numbers where we can project and show that.
Absolutely.
Mr. Vignesh Ahuja is asking, can you provide examples of significant EPC projects your company has undertaken, particularly in the infrastructure and construction sectors?
Yeah, probably I'll take from each of the segments one. For the metro rail, we have done metro rail projects in Chennai, probably as a subcontractor for a larger player, which is Afcons there. And we are also done for ITNL, their projects. For roads, we are doing NHA, National Highways Road, which is a widening of Chennai-Bangalore Highway. Then in fisheries, we have done fish landing center and fish ponds. In residential, we have done probably along my largest segment, around 5-6 lakhs of apartments, high-end villas, all those things we have done it. And site formation kind of activities were done for India Cements, where we are built. We are laid roads, we are raised compound walls, all those things. So ideally, they bought the land, but we did the rest of the activities for them.
Ms. Ananya Swaminathan is asking, how have economic and market conditions affected your industry and how do you adapt to these changes?
See, economic and market conditions. If you look at, if you ask me, I don't. See, just for you, for just to cite an example on the market condition, when the COVID happened, probably the largest thrust was given for the infrastructure industry. When everything was shut, probably May 17th, if I remember the dates, 2020, government has given the approval for starting of the manufacturing activities. So we were the first to start that activities there, and we had come out with the productions, and the infra works was going in full swing. So if you ask me, the market condition per se will not have a major effect on the infra industry, because whatever happens, infra works are going on, right? Probably the best example would have been the COVID itself. And economic condition of the governmental roles and regulations is something which probably might have an impact, like assuming the government reduces spend on infra activities. I don't think that is going to happen in the near future. So infra as a company, I think, or as a market, no, I don't think we'll have a major issues on those things. The only problem is that, or the risk factor, what you presume is the governmental changes or the governmental policy changes where the approvals and all. I don't think that is going to happen for in the short term.
Ms. Bharti Agrawal is asking, what is planned capex?
Rena sir, should we take this for the plant?
Sir, based on the plans that we have in the current fundraise, what we have, the money will go more towards the working capital requirement of the company, which will help the company meet up the projects that we have in hand, and also the other projects which can come over with. That is the things what we are looking at. In terms of capex, if you're specifically asking acquisition of another mine or something, I don't think so. Company is looking at that thing at this point in time, but it's more to expand the current projects and complete the projects that are in hand.
Mr. Nilesh Kirani is asking, orders mostly come from private sector or public sectors or government enterprises.
Primarily, can we just project it? We can probably with a live example we can show it. One second. Yeah. So if you look at this particular thing, see, first is the NHI project, what we're doing, which is again for the government. Then second is under Jal Jeevan Mission, again for the government. Third is again Jal Jeevan Mission for the government. Then fourth is again fish rearing center, which is again for the government. Then sixth is again at fisheries department work, again for the government. And from JWL, again this is a subcontract from JWL for doing a work. For, again, JWL has won the contract and we're doing it as a subcontract work for them. So primarily all this EPCs works are government related, either directly or through as a subcontract. My supplies from the mines, particularly, it goes to all the contractors, small, big, medium size, all those actors. So all those contractors.
Mr. Vignesh Ahuja is asking, what markets do you serve with your aggregate and manufacture sand products, and what is the demand like in these markets?
Yeah, for my first mine at Arpukote, which is very close to Madurai, we cater to almost all the southern district. If most of you have heard about the Tuticorin port, so Tuticorin port, then Virudnagar, Madurai, Kalakurchi, to Ramanathapuram. So around 7 to 8 districts we've been catering for that particular market, and to some extent we also used to export to Maldives and other neighboring countries. From the second mine, we particularly cater to Chennai. Chennai is the biggest market for. I mean, Chennai today with the metro rail happening is the biggest market for construction aggregate. So where we are supplying to Chennai in a big time, and probably from that segment itself, we are able to supply to another 4 more districts: Tiruvannamalai, Vellore, Kanchipuram, and Chengalpet. So I think this all are having a regular demand for materials, and we have not probably faced any issues in the past 7 years since we started the mining activities.
Mr. Brahman Roberts is asking, who will be our largest customer and what will be revenue breakup from our top 5 and 10 customers?
This computer will- See, who will be our largest customer? If you look at for last year, which is for the probably, I wouldn't say the largest customer. Probably, if you ask me the main customers, we have it in ACC is our customer. We have KNR, we have Kalanchium,
NHI.
then NHI again through SPL, Power Lab. NHI through SPL, they are taking the contract, then JWL. So those are our major customers. And host of this. Otherwise, we have smaller contractors who have been doing about 5-6 crores of turnover. Like there is something called Kalanjiam, the Sharath, and all are small. Probably the most famous being the ACC, the KNR constructions and all. And if you look at what will be the breakup from the top five customers, just give me a moment. Yeah. In 22-23, KNR had done about KNR constructions had done about 17.51 percentage. Then this Kalanjiam, they had done about 10.33 of my turnover. ACC having done about 4.5 percentage of my turnover. Apart from this is about the mining sector. On the EPC sector, last year I had SPL doing about to 25 percentage of my turnover, and then I had JWL subcontract giving us about 7 percentage of my turnover.
Mr. Prem Singhania is asking, can you share recent financial performance metrics such as revenue growth, profitability, and any outstanding debts?
Yeah, can you just present it if you don't mind? Yeah. Here we have the revenue and profitability matrix. The outstanding debt is about 30. How much is it? 36, right? 36 crores is the outstanding debt as on March 23.
Mr. Nirav Shah is asking, how much is the gestation period for the project? Sales produce receivable in number of days.
See, NHI, the average from the bill to the payment is about 15 days. Fisheries is about 30 days. And construction aggregates, ACC again is at 30 days. And most other suppliers are within 1 week or advance payment.
Mr. Vignesh Ahuja is asking, your promoter group has interest in the various sectors. How do these diverse businesses contribute to the overall success and stability of your company?
Yeah, see, probably we have been primarily an infra player. Like one of our sister concern does the flat promotion works. So when they typically take a flat promotion work, some portion of the work usually comes to Vishnusurya as a subcontract to us. So that has in fact helped us in those sector. And then we have another sister concern which does the background verification works. So whenever need arises, we can always take the support. So as a jointly, I think all these companies combined grow together is what we always felt.
Mr. Bumper Roberts is asking, what is the current order book and execution period for the same?
Yeah. Can I just project? Yeah. That's the order book, which is about 240 crores is the order book. And we look, it's looks like in 1 year to about a max for 1 year is the execution period for all these projects. It's already 6 months over. So by next year, we should be executing.
Mr. Nilesh Kar is asking, any outstanding from any projects turned to bad debts?
We don't have any bad debt. Probably there's a very one small amount receivable from ITNL, which is under arbitration. So other than that, I don't think we don't have an because primarily either it is either government project or government related project. or in the mining sector, it's 80% of cash and carry. The credit is only for the big companies like ACC, KNR, or any such kind of big contractors.
Ms. Anita S. is asking, how do you plan to stay competitive in rapidly evolving industries like technology and construction?
Uh, See, if you are looking at it, see whatever innovations happen, it is only about how you build the building, but the basic raw materials remains the same. If you take about the M1 technology or the prefab technology, which is taking rounds thing, the only thing is that your core raw materials of having aggregates or the cement or the steel remains the same. Instead of you building the things at your side, what happens is that they bring the materials which are at a factory, they prefab it or prefabricate it and bring it and probably fit it here inside the site. So however the materials are remaining the same, the aggregates, the cement and steel remains the same. So if you look at getting the technology part of it, I think we are also parallelly looking at R&Ds where we can set up and looking at various other options. Probably at this stage, I would not like to comment on what is going to be the future on what we are doing on it.
Saurabh Gupta is asking, can you provide insights into your corporate governance practices, including the composition of the board and any key policies in place?
Yeah, can I just present it, please? Yeah, the composition board. Say for the first is Mrs. Bhavani Jayaprakash, who is the chairperson. Then who was a non-executive director and chairperson. Then Mr. Tangam, who was an executive director. So, and and myself, I'm was a director and CEO there. Mr. Neelagandan, who was a director, non-executive director on the board. Then Mr. Ritesh Nayak, who's an independent director. Ms. Maya Swaminathan, who was an again independent director, and Mr. Ramana Kumar, an independent director. So all the policies are in place right from the audit committee and all ICC, all the policy as per the whatever the SEBI guidelines are there, everything is in place.
Mr. Ketan Mehta is asking, do we take projects independently or qualification or jointly with other partners?
See, wherever we have the eligibility, both in terms of technical or financial, we take it upon our own. Wherever we miss one, probably we'll join with a partner who has that eligibility and do the project jointly. Just for the example which I said earlier, the particular Jal Jeevan mission work, we had the financial eligibility, we didn't have the technical. So we are jointly partnered with JWL, who had the technical eligibility, and we are taking the project. So we do compensate both the things.
Mr. Bamar Roberts is asking, what kind of services we are providing in the drones or unarmed aerial vehicles?
See, in the drone sector, we are not very active on it. See, what happened is that we were looking for a project with NHI. So, incidentally, one of the offer which came to us was that for mapping the NHI roads. So, with another company on Garuda Aerospace and Market, we are tied up with them. So, we took up the work and probably we had a subcontractor to them. And here or there, we had done some buying and selling the drones. So, we are not probably a very active player in the drone market. Not more, I won't say not more than a 1.5% turnover comes from the drone services. So the primary thing has been mapping the NHA roads using drones.
Mr. Saurabh Gupta is asking, what is your approach to managing potential regulatory and environmental challenges?
See, regulatory challenges, I don't think, because as in this being the basic raw material for any construction sector, any constructional material or construction works, probably there might be a little stringent norms in terms of what are the precautions we should be taking at the time of mining. But other than that, I don't think we'll have much of a regulatory issues. The environmental challenge is what happens at these days. The SIA, which is called the State Environment Impact Assessment Authority, they're very very strong on how the mining should be done or what are the precautions measures to be done. Like you should. They are talking about putting up trees across the mines. They're talking about water management and all those things. So I think all that environmental challenges to a great, and we are not doing this mining anywhere in the probably in a place where that's thickly populated. So as per the guidelines itself, there are given a minimum guidelines. We have given a minimum distance guideline from the nearest one single house. Even if we have one single house in within a 1 kilometer or so, I'm not sure whether the kilometers are. We'll have to come back on it, but yeah, within that distance we can't put up a mine. So all that regulatory wise, I think all those challenges have been already been taken care, and even the norms are there how you should be disposing of a mine itself once you finish completing the mine, how it has to be done. Even for that there's a norms has been done. And adding to it, this just I would like to inform that our mines, both our Arpukote and our Mandavasi, the southern and the closer to Chennai mines, both have been awarded Best Mines Award by the Director of Safety and Mines. I think around multiple occasions. This year, I think the first year Mandavasi got it. Arpukote for them it has been regular feature. The other second mine which we started in 2015. Probably this is the third time we are getting the Best Mines Award.
Mr. Prem Singhania is asking, what is your approach to financial management and maintaining a healthy balance sheet?
So maintaining a healthy balance sheet, I would ideally say making the good margins profit and having it in the books. So financial management, yes, each of the project probably by the moment we start, we have funds allocated for that particular project. Say 20% of the project value or 30% of the project value has been allocated entirely for that project, and that project is probably run as a separate division per se. We don't. It's not that we are. And there's no jugglery. So each project is each line of business, and all the finances are independently managed. And balance sheet, I think all this culminates probably will give us a better balance sheet.
Ms. Meenakshi Gupta is asking, how do you ensure transparency and accountability in your operations?
See, as for the EPC goes, we already have an tender given by the government or by a principal contractor, who's as the case may be, and the tender condition is very clear that probably point one to point two we have to do the road work, point two to three we have to do the bitumen work. So each of the works is specially designed, and there has been at each point there will be a checkpoint by the department, by the principal contractor, and along with our people. So everything goes on records from the government giving the contractor to us or the main contractor, from the main contractor to Vishnusurya, and again it goes back in the same way. So I think in that way, almost the every leg of the transaction there's a clear transparency on it. And accountability in our operations, as I say, our bills are only certified only if the work has been done to satisfaction of the particular department. So I think that accountability is there at each stage of the billing itself.
Mr. Ketan Mehta is asking, what is your debt status, interest rate, and credit ratings?
See, debt status average, we are about 36 crores, right? 36, right? Yeah, 36 crores as of March 31st, the debt status was 36 crores. And interest rate, if you look at averageism, it should work to around 10 to 10.5 percentage. We have not been rated because it is not mandated by any banks as of date.
Mr. Bama Roberts is asking, we are eligible for bidding for works up to how much crore?
Rinaji, can I take this question?
Yeah, absolutely.
Okay. Yeah, I think for road works, we should be eligible until 100 to 120 crores, depending upon the mix of road and the construction works. On fisheries department works, we should be eligible up till 15 to 20 crores. and this is for bidding with that direct bidding with the tender. As a subcontractor, I think we are eligible for any value work. We will be able to do it. So, and with Jal Jeevan Mission, I think we'll be eligible for next tender around 150 crores tender value work. We're directly eligible with the government.
Mr. Prem Singhania is asking what factors contributed to the significant increase in total income from 2021 to 2023.
Can you just present that slide, please? One before that. See, from 21, if you look at the first, the total turnover is around 63, of which 34 came from aggregates and 28 came from EPC works. Then on 22, I think somewhere around January mid, we started the second unit, Vandavasi. So that hike of around 8 to 9 crores had come primarily because the second mines were in operation. And then EPC fees, it's almost a steady growth on it. So the primary contributing factor between 21-22 to 21-22 was, or 2021 to 21-22 was the new mines which have been opened. And from 21-22, 22-23, if you look at, from 42 crores, my aggregates had gone up to 74 crores. So this jump was primarily because my second unit was fully operational. See, the earlier year, the second mine was operational only for 2 months or maybe about 2.5 months. Beyond that, this particular 22-23 we had it for the entire year. So that has been a major factor. And in terms of EPC works, I had a major growth happening primarily because of my new work at from the NHI what we had taken. So that which is about 72 crores is the work and 50% we executed last year. That has been a major jump.
Mr. Vignesh Ahuja is asking how does it contribute to the communities in which it operates?
Yeah, just likewise I said, the SIA, which is the State Environment Impact Assessment Authority, which is a central government, come state government body, before giving its approval for operation of mines, mandates what are the as a CSR activities what the company should be undertaking it. So they typically say about probably some school welfare activities, village welfare activities. So they fix an amount. Up till this amount, we'll have to spend it. And every renewal, it has been reviewed and activities have been taken. Apart from the mandated activities, we also do our activities from our own side for the particular village wherever we work on with.
Mr. Bamar Roberts is asking what works we have done in the metros as subcontractor of firms.
It is primarily about a civil work for the stations, what they will be doing. The tracks, everything will be done by Afghan directly. We did the civil work for the stations.
Ms. Sita Baradia is asking what is the current order book in hand?
It's about 240 crores. Probably we can just show the slide in case this madam would like to have a look at it. 241 crores is the order book in hand.
Ms. Sita Baradia is asking what has been your experience in real estate sector and can you share some key achievements or notable projects?
See, real estate sector, probably we have not done much of real estate. We have always been independent on our activities as a construction contractor. Probably in one of our project, we had taken probably 10 apartments as probably as a part consideration for the work what we had done it, and we had sold those flats. Apart from that, we don't per se in our company be an active player on the real estate sector.
Mr. Bamar Roberts is asking what is the breakup of order book between central and state governments?
Can you just present it once again, please. Yeah, out of 240, the first work is from the NHI, which again from the state government, and All other, see, I wouldn't say the direct allocation maybe from the state, but all other Jal Jeevan missions again, the central government funded projects. But yeah, if you look at strictly issued by the central government will be 71 crores, and all others will form part of the state government works under Jal Jeevan mission or the fish landing centers. So probably around 60% comes from the central from the state and 40% from the central.
Ms. Bimal Gandhi is asking how do your accreditations as a class 1 contractor with various government departments enhance your business prospects?
Yeah, see, as a class one contractor, what happens is that in order to be eligible to take works from the government from various departments, they are issued licenses to contractors. So, depending upon the financial strength and all those things, there are multiple licenses. One is class three contractor who will be eligible to do works under 50 lakhs, then class two, and the class one being the topmost. So, without this license, we will not be eligible to bid for state government works without being a class one contractor.
Mr. Neerav Shah is asking, do you have received any early compensation bonus or extra rewards from any of the infra project you may have undertaken so far?
No, we haven't. We haven't done that.
Mr. Neerav Shah is asking, do you have any USPs policies for your next level of management groom up initiative?
Probably we'll come up with that, but I'm not probably commenting it on it as of now.
Mr. Bamar Roberts is asking, do so you are working from for IHMCL subsidiary of NHI for napping the roads or directly with NHI?
Directly, it was yeah, directly with NHI. The mapping was directly with NHI only.
Mr. Vignesh Ahuja is asking, how does the company ensure compliance with environmental and safety regulations?
See again the compliance. If you look at, there will be frequent. See, we have been allotted particular guidelines by the SIA, the State Environment Impact Assessment Authority, would have laid down the guidelines based on which we will be working, both environmental safety and all those particular sectors. So the assistant director mines, who's been particularly in charge of the particular location, has to inspect the mines on a periodical basis. So that inspection is being done on as far as the safety regulations are being concerned. And compliance with the environment, again, whatever has been the guidelines laid down by the SIA in our approvals, we had always been complying with the environmental regulations, what is required for that. In fact, we have been doing much more than what has been mandated by the authority itself.
Ms. Bimal Gandhi is asking, how do your resource management strategy reduce dependency on third parties and improve project timelines?
See, typically what happens is that the moment we take up a project, we align the main material available with us, and what has we also arrive, what has to be, what is short, either we buy it or probably outsource it. So even when we outsource it on a third party also, what happens is that we don't outsource it to one per party. If it's a 5 crore work, what we try to ideally do is that we'll make it into three of smaller parts, and we allocate to three different contractors, so that even if one person there's a delay in the work, we can always switch between one person to the second person. So in such a way, ideally we'll try to do most of the work amongst ourselves, and wherever that doesn't help us, when we engage a third party, we don't engage one third party per se. We always try to make it together, two or three parties together, so that at any point of time we'll be able to replace that particular person by adding the work to another third party also.
Mr. Neerav Shah is asking, is any solar power project or wind power installation project undertaken so far?
No, we haven't done any of this.
Ms. Sita Brade is asking, how do you assess and manage the risk associated with operating in different regions and industries?
See, different regions, like if you look at it, man, primarily we, as of now, all our works have been related with Tamil Nadu alone. So this particular region, I don't think, since we all belong here, we didn't have any much of a challenges there. And within Tamil Nadu, if you look at it, there are either Chennai or the Madurai belt where you're working on with. So since all our compliances are in place, all our approvals are in place, we didn't have any of the per se issues which might crop up. And with the industries, I think the concerned industry, this is particularly, we've been here in this industry for the last 25, 30 years, and I don't think there will be much of a risk what we are assessing. All the risk, whatever is, either has been insured or the safety measures have been complied. Like there will be a safety officer who takes care of my road works, or there's a safety officer at the mines. Day and night, there are two shifts. There are two different safety officers at the road. There's a safety officer. So individually, what all we can mitigate, we mitigate. All whatever we could insure, we insure it.
Um, we have covered majority of the questions. I think we can close.
Thank you.
Thanks, Mr. Sanal Kumar, Mr. Renav
Thank
Manseta for giving insights about the company and IPO to the investor community. And thank you, investors who have participated in the IPO roadshow.
Thank you,
Thank you.
everybody.
Thank
Thank
you.
you.